And we are continuing with our coverage from the Denver Gold Forum. Joining me now is a New York Times best-selling author, Dr. Thomas Barnett. He's also the keynote speaker here at the show. Thomas, thank you so much for being with me today.
Thanks for having me.
So, Thomas, what was your message here to audience members at the Denver Gold Forum today?
Well, I guess if I was to encapsulate it, it's that globalization is not slowing down. A lot of the assumption about the financial crisis globally, denting what had been perceived as a super cycle in commodities. I don't think it slows down. I think there are large macroeconomic reasons and urbanization of about 1 billion people, actually 2 billion people by the mid-century. The aging demographics driving a lot of financial flows from the parts of the world that have been doing the most saving to the parts of the world that are really joining globalization dramatically now in Africa, Latin America, and then moving more towards retirement in Europe. There's just a tremendous amount of opportunity in terms of where you could put your money to get the maximum yield. I personally am involved doing a lot of brokering in oil and gas deals now, and it is a tectonic shifting field with the fracking revolution in the United States bringing up production here, triggering this glut of natural gas. We're looking at the potential for the United States exporting coal to Asia in big numbers over the next couple of decades. So there's just a lot of churn and a lot of room for play, I would argue, much more so than I think people realize, taking a very pessimistic view on the financial recession of the last 3-4 years.
Right. Well, you do have a different point of view because many people I speak with now all want to talk about the slowdown in China, how about their GDP and how that's just affecting the world. So you have a really different perspective here.
Well, we got to take into account the rise of South-South trade and investment flows. China already is a bigger investor in Africa, the continent, than the World Bank is. And the World Bank was, pretty much the gold standard in terms of who put money in it, who was willing to put money in Africa. So when you factor in that, you factor in what China's got to accomplish over the next 3-4 decades, I mean, there are reasons why it's going to slow down. It goes from extensive to intensive growth. And there are competitors coming on who have the demographic dividend that China's enjoyed for the last 4 decades, meaning a lowering of the dependence to worker ratio. That's not going to happen for China, but they are going to be surrounded by Southeast Asia, which is going to have a huge demographic dividend, and India right to its west. So we're looking at very positive long-term growth for the Chinese. It's just going to be different because they're going to be more in the ownership, less in the manufacturing. And if the United States was smart, quite frankly, they'd look at Latin America with the same sort of envious eyes and covetous eyes that the Chinese are now, because America needs to be surrounded by faster growing economies, just like the Chinese are going to be advantaged over the next couple decades.
So you mentioned that there's demand for coal coming in from China. What about base metals, though, like copper?
Well, I mean, they're such a huge buyer in everything. They have been the assembler of note in the manufacturing, the factory floor that has been Asia for the last 30, 40 years. I think that shifts over time, but I don't think the demand slacks, primarily because you're looking at an infrastructure build-out of about $40 trillion. I mean, just massive. We always put it in terms of the West upgrading its infrastructure, but we're talking about, greenfield operations in many parts of the world, largely driven by the emergence of a middle class. And as we know from history, the middle class is the same the planet over. It has unlimited demands for mobility and electricity.
So you mentioned natural gas and oil. Are those two sectors you're liking right now?
Absolutely. I mean, I think there's going to be a lot of coal use simply because you can't get enough natural gas and oil to China and India to cover those places. But the movement down the hydrocarbon chain, going from coal to oil to natural gas and beyond, I think is being accelerated by this fracking revolution. It is going to trigger the electrification of the car fleet and ultimately the use of natural gas in even long-haul trucking here in the United States. And that's going to be a real tipping point. So I think to be involved in the fracking revolution in whatever extent possible, that and betting long and bullish on arable land. The more north, the better. So people always ask, where would you put money? Every extra dollar I would put is absolutely arable land in Canada and Russia if I could buy it.
So what are your thoughts on gold?
I'm not optimistic in the sense that I think there's going to be a lot of pressure as the United States kind of inflates its way out of a certain amount of debt. I think there's always going to be a certain attraction to it. I think the longer term question for gold is, we're going to face this reality of the saver in the system, Asia, rising Asia, China in particular. Can it be a big enough source of investment to help Europe head into retirement and to simultaneously fund what is going to be the creation of new and emerging markets in a lot of young parts of the world? I mean, think about it as a sandwich generation, paying for its parents, paying for its kids. China's going to be sort of the ultimate sandwich economy. They're going to be paying for a lot of demographic aging in the West and a lot of emerging economies in the South, even as that place ages fairly rapidly over the next 3-4 decades. I think China's interest in gold, based on their nervousness about whether they can cover all those bets in terms of, fiat money. I think that's going to be the big question.
Right, so they might be buying more gold, you think?
I think to the extent that whatever they decide, and I think they're going to get more and more nervous, at least for the next 20 years, as they age and are uncomfortable about the healthcare situation and the pension situation, vastly oversubscribed in that part of the world, almost as badly as it is here in the West. I think there's going to be a lot of desire to, hedge against uncertainty.
All right. Good thoughts from you today, Dr. Barnett. Thank you so much. I hope you're having a good time at the Denver Gold Forum.
Very much so. Thank you.
And thanks for watching our continuous coverage from the Denver Gold Forum. You can email me any comments or questions at newsfeedback@kitco.com. Reporting from Denver, I'm Daniela Cambone.